We're rolling. Welcome to the REI Rookies podcast, the Real Estate Investing Rookies podcast, episode number 54, where we invite you to follow us on our journey towards financial freedom using the power of real estate. I'm Josh Koth. All right, guys, we have the second half of the Millionaire Real Estate Investor panel discussion we began last week. So enjoy lots of great content here from some pretty experienced real estate investors and yours truly. And the audio is a little, not the greatest quality, but there's lots of great content we thought it would still be valuable to some rookie investors. And the first question got cut off, but the moderator had asked me what sparked me to get into real estate investing. So that's kind of where the discussion picks up. Enjoy.
My family was, you go to college, you get a job, you work, you accumulate a pile of money, and if you're lucky enough, that pile of money is big enough where you can live off the interest and don't run out before you die. So just deviating from that plan was hard, right? So it helped like taking a class from these guys and just seeing that it was possible, like this proof of concept, knowing that there are people out there that, are wealthy and successful doing this. So just seeing that proven in real life was huge. So that was my biggest challenge by far, was just mindset. Because honestly, once I emptied my IRA, I had money, so I could purchase properties. I knew I'd have to get creative eventually, but just deciding whether it was the right thing to do. Because what holds people back, right? It's that fear. What happens if you get a call at 2 in the morning, the toilet's clogged? How many times does that actually happen? By the way, it's not very often.
I almost started calling you.
It's the fear. It's like all the things. Oh, what if the market crashes? Well, I tell people, if you're holding rentals, great. More people places to rent. Unless you're banking on appreciation and you're trying to sell the home at that exact moment. The market can do whatever it wants. If you're holding, you're fine. It's one of the safest things to do ever. So once you start batting down those objections and just figuring the answers to all that out, then it gives you that courage to move forward and take action. And, you have to take action in this business. Another fear thing was submitting an offer that was way below what they were asking, right? Now, this is something I have zero problems with now, but I remember at the beginning, I was telling Lee, aren't they going to be insulted? This is like $4,000 less than they're asking.
Yes, they will.
Right. Exactly. Yeah. And eventually now, we forgot our offer price. I don't even ask what the asking price is. It's irrelevant. We know what our profitable price is to buy the property at, and I can justify that. So really it was just fear getting over that. Well, what if they're going to be mad? What if they're going to be insulted by this offer? That's just business. You just have to remove emotion out of it. And once as I call it, became a skin-covered robot, and just systematically offer, what is considered a profitable offer, then I'm able to make those.
I think that's a sign word.
Yeah, exactly. Right. That's how I try to operate. Because, you're not going to live in this. You have to be emotionally attached to the deal. So once you remove emotion, and then I was able to move forward and submit those insulting offers, a lot of that fear went away, and now it's just part of the process.
For me, I think it was the first one with the financing, with people at the bank saying no, until and now I was just going to regular banks asking for a regular loan, and it was kind of interesting with the one bank in town I went to. They kept pushing an FHA loan, and I didn't want that. I'm like, well, I just got back from overseas. I want to use a VA loan, and it worked out quite well, because I ended up doing a different program. I can't remember which way it was. It was I don't think it was an FHA loan, but I closed it, that first fourplex, 3% down. And I don't know if it was FHA back, if that was the one I used or not, and then later on I switched it to a VA loan, probably 4 or 5 years after that. And then I refinanced it not too long ago, and I put it on, I think it was a 15-year. That must have been 5-6 years ago.
Can I ask you a question? So when you were getting told no by these banks, what kept you going? What kept that what gave you the persistence to keep going to the next one? A lot of people would say, I'm out. It's not going to work out.
It was the books that I read overseas. It was all of them were like, somebody will give you money to buy it. And I was just like, I don't know, there must have been 6, 7, 8 books that over there that said there's a way to buy it. They're going to tell you no. And there's got to be somebody out there, and I just kept digging and found it. So that was my biggest. Once you got the first one, it seemed it was just easier after that, I guess.
What was your big why you even wanted to start investing in real estate? I know, Josh, you touched on yours, but Kumar and Wendy and Bill, I'd love to hear more about why you decided to actually do it. Why it was important. Bill, you want to go?
When I was the original Rich Dad Poor Dad, when you can make money and not actually have to be there or be at a desk or be at a job, I was like, okay, if you look at the numbers, I can leave here for free. I mean, I lived in the fourplex, so it really, right there, I was just like, man, so all my earned income from my job that I was doing, I could save that up, I could do whatever, and save up for another one. And it just clicked with me. I think the biggest part was before I moved into it, before somebody's lease expired, and then I gave them a 2-month notice of non-renewal of my lease. When I was making $400 a month, and I was just like, man, and that was just $400 cash flow, nevertheless the appreciation, the paying down your principal, the tax advantages. It just clicked with me, and I was just something with those books. It was funny because I sat at NDSU for 4 years, and I went, shit.
Why do you keep buying them? Why did you stop at that one? Why did you keep going?
It's the freedom, the snowball effect. It's the financial freedom of it, to where down the road you know you're going to have that nest egg, and it's going to be paid off for a big chunk of it. I don't think most people, if you're an investor or a business owner, you don't ever really retire. If there's a deal out there, you're going to make a deal. I don't care if you're 35 or if you're 75, you're still going to make a deal if the opportunity presents itself. It was the long term where I can be in Arizona, I can be in Costa Rica, rent's doing first. Doesn't matter where you're at. And that was the big thing that clicked with me. I guess the freedom of it.
I have a question. Do you think single family twin homes or multifamily are more profitable when you're investing in real estate?
For me?
Yeah.
All of the above.
Yeah.
I think the cash flow is always going to be better on multifamily, for sure. But it's going to be a different kind of tenant. So for us, we always invested. Like when I started real estate investing, my kids were really little. They were literally like 1 and 2. And so the easiest thing for us was really to buy single family homes because the tenant's a lot easier. You know, like when you started, you were a young guy, right, with no job. You quit your job, and so you had a lot more time. But for me, I just really wanted whatever was easy. And honestly, our real estate investing, that's kind of been our mantra. Like we could probably sell some of our properties and reinvest them. Like I know we could. And yet, my husband and I, we run 5 other businesses, and so that's not really a priority for us. But if you're looking for cash flow, then definitely multifamily is going to be better.
And for me, I just look at it like simple math, right? For every $1 I'm going to invest in this property, what's it going to return? I mean, I'd invest in trailer homes, single families, huge apartment complexes, whatever's going to return the highest amount, right? With the least amount of involvement on my part. So property management fees, repairs, tenant hassle, because you got to figure a different, quality of tenant at different levels, different price points too. So all those things factored in for every $1 that goes in. We have kind of a simple rule of thumb, like for every 10 grand we put into a property, we try to make $100 a month cash flow. That's just kind of how it's worked out, at least in our business. So if I can't get that, then, I'll work the numbers until I can and offer that amount, right? So really, we'd invest in anything that makes money.
And it just depends on your goals. And that's the thing, whatever your goals are, whatever your financial goals are.
I don't know, I've always loved the multifamily. But if a deal presents itself to where if it's a good return, why not buy it? And I think anybody would, whether you're into buying 10 plexes, 12 plexes, or 4s. If you get a single family rental or a duplex and the return is there, why wouldn't you grab it? The nice thing is with single families, yes, you get them rented, they take care of everything, the utilities, the lawn, the snow. you don't have nothing to mess with until they move out. Hopefully you can get it rented right away after that, but then you have no income once they move out. Or you got a fourplex, yes, you got to take care of the lawn, the snow, but one moves out, there's still enough income there to cover all the expenses. So it's just how it weighs out on your risk portfolio. And
another nice thing about single families is if you need to sell it, it's a lot easier because you're not just selling to investors, you can sell to an owner occupant. So your buyer pool is much wider. So it's an easier price point, a lower price point to get started. So
easier to get financing.
well, if you're gonna house hack, as they call it, like if you're gonna live in it and then move out and keep it as a rental, that's one way you can do that and just keep daisy chaining them together like that. So there, it's probably, I don't know if it's easier. I mean, because if you pass 4 units, then it's a commercial loan, so that's a different ballgame.
I don't think it's any harder to get a loan for a fourplex than it is a single family. It's just you're just gonna have to come up with more money down. And if you live in it, you can get, if you have a VA loan, you can get in for nothing, or 3.5%, 5% down, as opposed to if you're an investor, you got an investor loan, it's going to be 20 to 25%.
And it all depends on your banker. If you just go to a regular personal banker, they're not experienced with rentals, so they're right away, what are they going to tell you? No. You got to find.
Would you like to open a checking account and a credit card?
But that's just, you got to find the right banker that does investment banking. Because it seems like every time, how many times did we went in the American Federal that one time, we were all in our Carhartts and doing snow removal, and we wanted to get a line of credit, and they looked at us like, well, you should be saving money, for maintenance and stuff. Like, we are, but we just, what do we get for a line of credit? We want to buy more. So we had the equity sitting there. We walked out of there and haven't been back since.
Wendy, what was your big why?
Well, we're just also financial freedom. So, and also money is good for the good that it can do. It's been great to have money. When Hurricane Harvey hit Houston, we're about 2.5 hours away, and we were able to write a check for $25,000 to Kid Cares. And so for us, it's about creating more money and creating more wealth so that we can give back and help people. My dad's been pretty sick for the last 4 years, and he had cancer, and that put him in a wheelchair, and we were able to purchase a home so that he could move into it before selling his home. So I know a lot of people think like, oh, I don't need more money, I don't need to make more money, I don't need all that, money's bad, money's evil, all that kind of stuff. Well, money is really good for the good that it can do. And, the great thing about Keller Williams is it teaches us how to make money, not only in our real estate business, but, through classes like this. And you guys are all smart business owners in here. And, if God gives you the ability to make money, you should make more money. You just should. Because even though you may not need it, there are lots of people in your life who can use it.
Josh, I want you specifically to tell us a little bit about luck, because Josh started investing and buying properties that were actually on the multiple listing service, which is the MLS for real estate agents. And I would say just about every investor out there would agree with me that there are no good deals on the MLS. You can't find them. You can't buy them. You can't find them. They don't exist. Josh is how many properties have you purchased through the MLS in the last 2 years?
At least half of them.
Yeah.
So of the 20, at least 10. So I mean, and the thing is, I just didn't know any better at the time. Like I didn't even realize there was a whole wide swath of off-market properties to even go after, right? I mean, obviously we pursue those now, but we still buy stuff off the MLS all the time. And if people say, oh, there's no good deals to be had, well, you're just not consistently offering enough. So, Lee, how many times we text you a week and say, offer this on this property, offer this on this, right? Mm-hmm. 5-10 times a week probably. And it's just that consistent, figuring out what our profitable price point or a profitable offer is and offering that. And our little joke is, well, we're never going to take this, but we'll offer it anyways.
Josh bought me a nut cup for Christmas.
Yeah. Exactly. He's the one that has to talk to the listing agent, so he's the one that takes the verbal abuse. But we just figure out because a lot, they'll say, oh, they're asking $100,000 for this house. It won't cash flow at that price, and we just figure out what price will it cash flow at. That's what we offer. And it's just that simple. So we just completely ignore the asking price. And I don't care if it's listed on the MLS or anywhere really. And we offer that number.
If you want more luck, take more chances.
Yeah, I mean, it's just about consistently making offers, even though, getting over that fear of they're never going to take this, they're going to be insulted. It's just business. So, we remove luck out of the equation by just being consistent about it and persistent. And that's probably the biggest thing. I know a lot of people, when we meet with other investors and they haven't done a deal yet, first thing I say, how many offers have you guys made this week or this month? Oh, there's just no deals out there. Well, if you offer 0 offers, you're for sure going to not do any deals.
Right.
But we might have offered 50 this month and maybe done 1 deal, maybe not done any, but at least we have a shot at it. So I think that's how you just kind of make your own luck, just by consistently offering profitable offers, regardless of where you find them.
How do you guys handle the unexpected capital needs? Like a furnace goes bad, or it needs to get replaced?
You can't spend all the money that you bring in. That's where a lot of people, I think, get in trouble. They're like, okay, so they're getting in all this income, but you do have to put a chunk away for maintenance and for vacancies. Just because you have 2-3 good months in a row where your maintenance is low and everything's rented up doesn't mean you can go buy a new boat. It does save, you save for a rainy day like that, because all of a sudden a new heating system is going to cost you $8,000, $9,000. Or in a bigger unit it can be $15,000. So you do have to be conservative when you start bringing in that rental income. That's a big part of it. All this doesn't go into your pocket.
Yeah, well, it's like any business. You got to treat it like a business. You got to invest money back into your business, and you got to have some reserves for your business.
And that's why your offers end up getting so low, because if you take, like a lot of times I talk to sellers, they'll tell me how much their property's worth, what they think it's worth, and they'll say, well, I just say, what does it rent for? I just stop them. They start telling me about, all the nice things, attributes about the property. I say, what does it rent for? And then I know my formulas from there, right? We typically take 40% off the top for expenses, 20% is probably your cash flow, another 40 might be for debt service, right? So knowing those numbers, I can walk back and do an offer price based on the returns we're expecting. And you can talk them back from their initial price they think it's worth real quick. So, and all those expenses, for CapEx and everything are built into those formulas. So you're always setting aside, enough to cover that. And that's where a lot of people get trapped, right? They think, I was renting for $1,000 a month, my mortgage is $400, I'm making $600 a month. Well, you're not really, because you have to account for all those, planned and unplanned expenses.
What about your best deal? Josh, I want to hear about the one that I always bring up every time we talk.
Yeah, well, this one was a good one because it taught me a couple lessons early on. This was just about 4 or 5 months into investing, and I was with Lee, and we saw a property come up on the MLS, I think it was for $80,000. And we walked through it. It was pretty trash. I knew it was going to need all new sheetrock and carpet and everything. And I said, the only way this works is if I get it for $30,000. And Lee even chuckled. He's like, shit, yeah, first day, good luck. I said, well, he said, do you want me to call the listing agency? I said, let's write it up, right? And that's where I learned the lesson of always write the offer. Never just verbally call, say, we'll do a soft pass. Because if you write an actual offer, they have to present it, right? I mean, I don't know the legal, ethical terms of real estate, but I think that's why I understand it.
Yes.
So, and I wanted them to see it so they could have a chance to accept or reject it. And I just kind of put it out of my mind. And he calls me the next day and said, dude, they took it, they didn't even counter. I'm like, wow. And it turns out it was part of a 4-package deal of an estate sale, and that the other 3 were sold. And this was the last thing between them and their money, right? And they knew the house was trash, so they accepted the deal. So we put about 20 into it, rehabbing everything, and got a tenant in there. And actually we ended up selling that one. That's a whole long story, but I mean that taught me just a great lesson about always have the offer in writing. Always present it officially. It just has so much more gravitas when it comes in, rather than just taking a verbal pass. So that was a great lesson there.
It's one of the hardest things, one of the hardest concepts to have a conversation with people about that want to get started investing in real estate. And it's one of the main points I wanted to hit home here is the the value of your equity over time and your cash flow over time just continues to expand and expand and expand. So if you end up even if you only end up having one rental property over time, that's going to be a big nest egg for you. It's a single family home or a fourplex. And if you can get 10 or 15 of them, and over time your equity goes up, and look at by the fourth slide, the debt is gone. So now you've got no debt, and you've got $3 to $5 million in investment property after 20 years. A lot of people can't think and can't see past 1 to 2 years, and that's why they get into it. They get a bad tenant, and they say, "Wow, this is horrible. I'm selling. I can't handle it." And so it's a really hard concept to grasp, but it's important if you're going to start investing that you think long term.
But if you look at the how everybody's been taught that when you get to that golden retirement age, your house should be paid off, your bills are paid down, kids are out of the house. So when you start pulling from your other investment vehicles, you can have less money. Well, if you're making so much, say you're making $200,000 a year when you're working, in a household, when you retire, why would you want your income to go down? That's what I don't understand, and that's how all our society's ever been taught. When you retire, yes, you get your Social Security and whatever, some money coming out of your investment vehicles. Well, you get 3 or 4 rentals under your belt to have those paid off. You can it's population growth, supply and demand. Rents are going to continuously go up. They always have. I mean, yes, you might have some plateau times or dips or whatever, but when you have it paid off, you get some of those down the road when you're 65. Your income's going up when you totally retire, not going down.
Before we get into questions, what's the final word? What would you like to leave these people with as a thought as far as real estate investing goes?
I wanted to just touch on your point too. On the, about even if you're a doctor or the highest income earner possible, and you're capped out, you're trading your time for money, right? So I had to break that mindset because I had a photography business and I still do with, I'm trading my time, my hours for money, and I was thinking, how can I make more money? Well, I can charge more per hour, or I can fill up more hours in the week, but that's capped out. I mean, I'm running up against a brick wall. And same for, massage therapists or, barbers, hairstylists, anybody that has, hourly service type job. I was just capped. And I'm sure it's the same for doctors. I mean, they can only do so many surgeries a month or whatever, however they get paid. You're capped out there. So I was like, how do I bust through that wall? And, the passive income, and Rich Dad Poor Dad was the book, and then I also read that book as well. And that kind of puts the plan, gives you steps, right? And whereas Rich Dad kind of like had the spark, and then that's really like, here's I actually can do it. So I think a combination.
Rich Dad's about your mindset.
It's about mindset, yeah.
He doesn't really tell you what to do, but.
And you start thinking crazy things like, well, I want that, that car. Well, if I bought a rental property and then the cash flow would pay for the lease on that car. You start thinking like that rather than just, purchasing the car. You start thinking about purchasing assets and having those give you the lifestyle you want. So that's really my note to leave you with is just, work on your mindset and, just have design the life you want, right? I mean, anything's possible. So just, if you take enough massive action, have the right mindset and through persistence, anybody in here could acquire, as many properties as these guys who are a lot further along than I have. And you can reach those goals before that 65 hits,